Hey everyone, welcome back to the Mark Loeffler Experience. Today we are going to go through Canada's housing market. I mean, who knew that I would be talking about real estate in Canada on this show once again? But you guys love the national update, so that's what we're doing today. And we're going to talk a little bit about what I'm doing in this market and what I think maybe you should be doing as well. Who knows? Take the advice, don't take the advice. We'll all see where we're ending up 5 years from now. And as always, this video is brought to you by Catano Loeffler Realty Services. If you're looking to buy a home, sell a home, or invest in real estate in Southwestern Ontario, definitely do give us a call. And again, I am licensed in the great province of Alberta, and I do have 5 off-market buildings totaling over 150 units that are available right now. So if you are interested, come check them out or give me a call. So Korea. Again, everybody else releases stats on June 2nd, and they take till the 15th. Just going to leave that out there. Again, doesn't annoy me at all. All right, so national home sales fell 8.6% month over month. We're expecting that, weren't we? I mean, interest rates are going up. I'm going to guess that we're probably seeing a lot more balanced markets out there rather than sellers or buyers markets. That's just a guess from what I'm seeing out there in Southwestern Ontario, and Southwestern Ontario being 25 to 30% of the entire housing market in Canada, because they do have about 25 to 35% of the entire population of Canada in Southwestern Ontario. Seasonally adjusted monthly activity came in 21.7 below May record of 2021. Just going to say that we are still seeing very, very strong numbers. We're not imploding. The world is not coming to an end in the real estate market. Are we off the February highs? Oh yeah. Was that just stupid anyways? Oh yeah. Was that just fueled by free money from the government? 100%. And very, very low inventory. Actually, it was very common inventory, but the federal government raised the demand so high because everyone was like, oh, I can get free mortgages. And they were free. I mean, when you consider inflation at 8% and you're getting 1.5% mortgage, literally, that's free. You can't get any freer than that. The number of newly listed property is up 4.5% month over month. So sales are down, listings are up. That's what's going to lend me to believe we're more in a balanced market. So sales average, this is weird. And I don't know, like, this is average sale price posted 3.4% year over year gain. But I'm going to show you a chart coming up in a little bit. And we're going to talk about, how that can actually be with this other stuff on the chart. I'm just going to let you comment down below when you see this chart, because I don't understand. I like economics. I like everything to do with all this stuff, which is why I geek out on it, and I do these videos every month, every week, every day, whatever. But yeah, it just doesn't make sense. So obviously we declined between April and May. So, which happens? Like, April is usually a bigger month than May. May is usually a bigger month than June. We go into summer. There's less sales through the summer. They pick up through the fall and slow down into the winter again. That's just how our seasonality works in Canada. So we will see what happens. Outside of the housing market, we're still seeing a lot of supply issues. So whether it's chips, lumber's coming down in price, employment market is still on fire. We're still like 8% inflation. Most talking heads are predicting that we're going to have a food shortage come fall. This is all based on Ukraine and Russia not being able to get their harvest in or planted, right? You don't plant during a war. So basically, yeah, again, more balanced market is what the base is saying. Ultimately, this has been expected and forecast for some time. Yeah, because at some point they were going to have to turn off the tap of free money. This is not, like, they couldn't keep this going forever and ever and ever. Like, that would put us into 20%, like, we would get into hyperinflation at some point. We did fall off a cliff. Fixed rates getting way out. So fixed rates went up in March. Basically, they doubled. Bank of Canada rates coming to follow it, but is not there yet, right? But the fixed rate is what's really driving this. And we could see 5% interest rates on mortgages soon. I think we're going to see 5. I doubt we'll see 6, but I think we're going to see 5. With sales down, new listings are up in May. Sales to new listing ratios eased back to 57.5%. So out of 10 properties that are listed, 5.75, almost 6 out of 10 are selling. Obviously lowest level since April 2019. And long-term average is 55%. So we're really close to that average, and we're still above it though. Like, that's the thing. We are still above that, which is still decently bullish for housing. So here it is. Less than 1/4 were in seller's market territory, while a small handful were in buyer's market territory. So that means that we're seeing the 75% of all markets out there being in more of a balanced market. And which ones aren't in the balanced market? That's what we're going to talk to about that soon. 2.7 months of inventory on a national basis, still really low, but obviously, when we had a quarter of a month, this is huge. So it's starting to come back to normal. This is, again, fixing the overheated market that they made. Damn government intervention. They can't just leave well enough alone. So month over month, again, I said this before, we're down 0.8%. April was 1.1% on a national average. So the national benchmark price is $823,000. Again, most of the market monthly declines we're seeing in Ontario. We did do a video earlier in the month showing that, they are starting to flatten out as well. They're not seeing the huge price declines, but they also had the huge price increases at the beginning of the year. So we're still going to see relatively strong year over year numbers. It's just once that comes around next April, then we're going to start to see some year over year changes. Vancouver Island saw prices increase, while Vancouver is generally flat month over month, which again, we're not meant to see huge price increases month over month. Like 0.5%, 1/4 of a point month over month, especially on a national average, is massive. So these are big numbers down, but they were huge numbers up. So aggregate composite MLS is still up 19.8%. I don't know where this 3.4% comes into. I think they've got their charts wrong. But who am I? I'm not, I'm just a guy who makes videos. So here's the residential sales activity. And you can see we're still above 2019, 2017. This is with that huge run up in price. We're still above those numbers. We're still selling. A lot of houses are still selling, everyone. So don't get us wrong. We're not falling off the cliff just yet. We fell off a cliff. Seems we had a bit of a soft landing. That's what it feels like right now. And again, here's the residential new listings, pretty common. And look, they inflated demand so much, but they couldn't inflate supply. This is what caused prices to go up stupid. Right there. You look, same supply, maybe a little bit more because they had this quarter to take up. But it's pretty much, if you take that out and average it, it's going to be the same supply. But they put so many new buyers into the market with their free money. That's your balanced market. I don't really like that graph. I don't think it's good. Here's your... this is what they're getting their thing off, 3.3, but yeah, I'd like to see the actual physical numbers on that because here, look, here's your residential average sale price. So here's Canada, 3 point whatever percent. You got BC at 8%, Alberta at 8%, Saskatchewan's down. But let's be honest, there's fewer people in all of Saskatchewan than there are in Hamilton. Manitoba's up 15%, Ontario's up 9%, Quebec, 14%. 25, 26. So how is Canada, as an average, up only 3.3%? This boggles my mind. Didn't they look at this graph and say, ooh, I think we missed a decimal point? Let's go to national house prices, everybody. So, Northwest Territories, down. Look at that, Canada, 3.4. Again, I don't believe that. That's not, they've done something in the math. I just don't believe it. Prince Edward Island, up 18.7% year over year. Again, but so low prices that the interest rates aren't going to have a huge effect on them. They're going to see the inflation, they're going to see price wage growth and stuff like that. So, and I don't know what the in-migration is on Prince Edward Island either. But I think that's going to be a decent market year over year for the next little bit. Let's check out Halifax. 33% still year over year. Like, these are strong numbers, right? Let's check out the good old New Brunswick area, Greater Moncton. 36% year over year. We're still flying here, everyone. We're still flying out in the East Coast. Let's check out the Montreal census, 15.1%. And again, they've been super steady. They haven't had the huge rise. Doesn't seem like they're having that huge drop. It just seems steady. Let's check out the York region. This is very, very, this is like a lightning pole for the region. They usually have some of the biggest drops. They had the biggest drops in 2015, 2017. This is one of the areas that see huge price run-ups and huge price drops. And so right now they're only up year over year 6.1%. So that could go into negative territory if they don't level out, which they probably will. Let's check out Windsor. Remember when you could buy a house in Windsor for $30,000? Now, that same house, $681,000. Probably not that house. But you get my point. Greater Toronto, again, 24%. That's nothing to sneeze at year over year. Again, super happy with 5-6% year over year. So if you're making 24% and only putting 20% down, that's 100%. More than 100% return on your money. And that's just for buying it. That's not even including renting and making cash flow or doing any improvements to the property. Let's check out the good old Sudbury, 25%, still going strong. That's the Sioux, 41.8%, almost 42% up in the Sioux. And let's look at that. $226,000 was the average sale price. Again, same as PEI. Inflation is going to continue to keep those markets strong in those areas because they do have a lot of mining. They have they're probably going to have wage growth up there, and that's going to drive demand. And they're not really building that much up there. Where were we? Let's go Sarnia. 20%. So it's starting to, Sarnia's been strange. They've been up and down, right? Peterborough, Kawartha is 27.4. We know that's super strong. Cottage country. Cottage country isn't affected as much by interest rates, but what they are affected by is the stock market. And that hasn't been good lately. So we'll see what happens there. Ottawa, 9.7%. Ooh, it's starting to flatten out there. And let's do a little London. 17.6, starting to come off their highs. They were up over 40. Kitchener, 15, same. They're starting to flatten out, right? Hamilton, 18.7. Coming off their highs, right? Oh, just Kawartha Lakes. We have just a Kawartha Lakes. So you can see Kawartha Lakes is pulling up Peterborough. 30.4. So the cottages are pulling up the surrounding area. Ooh, Durham, 10.3, and they were one of the hottest regions. And Bancroft was up 60% year over year. Let's check. Bancroft now 13.3%. That's someplace that's going to level off. Winnipeg, 11%. Nice solid performer. Saskatchewan, let's check out the good old Saskatoon, 4.4%. And here's the thing, that's a market that you can literally go into and say, great, here's my buy price, here's my fix up price, here's my exit. And those are the markets that are good for flipping. I don't like to flip in markets that are going up 10, 15% because I don't know, and you got to fear that if your project takes 2 weeks too long, that now you're going to be on the downside chasing that market down. Let's check out the Fort McMurrays of the world, 2.1%, which is good because they were down year over year this time last year. Edmonton, good old 9%. I'm super happy with a 9%. That gives me a 50% year over year return if I put down 20%. And 15.2 for Calgary. Let's check out this Victoria, 26. As we know, the island has been strong out there, right? 31%. Greater Vancouver, still up 15% year over year. Monthly, it's flat, but we're still strong year over year. So what am I doing? Well, I'm going to regions which did not see that huge price increase. I'm actually starting to look back in Ontario, and if I can pick up deals where, I have some good upside, I'm definitely looking to buy. I am a definite buyer at this point. I mean, I'm working on 90 units out in Edmonton right now. We're just going back and forth on an offer. Got those 5 buildings for about 150 units that just came in that I have to analyze today. So if you guys want to look at something like that, definitely hit me up on Instagram. Let's connect and let's chat. All right, everyone. Thanks so much. We'll catch you next time.